Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by taxbuddy.com, a leading tax filing portal in India. US markets, as I told you, it is the same story. There was nothing surprise in Fed minutes, and Fed keeps saying that they will increase the interest rate until the inflation is coming down. So the same thing only they have repeated. So there was no surprise. So therefore the US markets have stabilized. It was very volatile, but at the end of the day, Dow was down slightly and Nasdaq was up slightly and S&P 500 was almost flat. And today the Asian markets are also mixed and Japan market is closed, I think, and SGX Nifty indicating about 50-60 point gap up. And what happened here is not because of the global cues. Even now SGX Nifty is indicating 50-60 point gap up because of the global cues. And here we have our own problem. And yesterday, Adani index, that means the Adani owns 10 listed entities. Adani Enterprise, Adani Port, Adani Transmission, Adani Power, Adani Wilmar, Adani Total Gas, Adani Green Energy, NDTV, Ambuja Cements and ACC. And all these 10 stocks yesterday fell an average of more than 5.5%. So this Adani saga is the one that is dragging the market down. Otherwise, after a good budget, we should have gone along with the global markets. So we may start along with the global cues, a 50-60 point gap up, and after that what is going to happen is anybody's guess. Usually when the markets make a bigger fall, the next day at least one time it will try to test the previous day's low, and then only if there is any recovery, so that recovery can be better. I can say double bottom. So therefore yesterday's low is very important. Today is expiry day, so therefore markets are likely to be very volatile, and that too, yesterday markets made such a big move, and nobody expected even Reliance to fall more than 2% yesterday. So yesterday it was a all-round selling, but right now European futures are higher, US futures are also higher. So therefore, some sanity may return. I think the yesterday's fall was, I can say it is an aberration on the downside. So there was nothing so big in India that warrants nearly 300 point selling in Nifty in just one day. So overall, the markets are likely to stabilize. There may be some intraday fall, intraday recovery. Markets going to be volatile from the beginning. Now, these expiry day traders will be coming in and will be adding more volatility to the markets. Looking at sector wise, so definitely today IT stocks may perform better. Okay, and the Reliance is also in focus. And banking stocks, private sector banks may do well. Public sector bank is still doubtful. It depends upon Adani's fortune. So also Adani Enterprise particularly has been falling about 100 rupees every day for the last few days. And yesterday also it hit a lower circuit. So today we have to see whether it will be hitting. So again another lower circuit. But I don't think that today it will be hitting another lower circuit. And at best, it can fall like few points. So I think Adani Enterprise will be taking support around 1300. So that is where the highest open interest is there among the put options. What is more important is not Adani Enterprise today, it is Adani Port. So Adani Port, which was doing very well for the last few days, and yesterday came under a severe selling pressure. So Adani Port is a stock to watch rather than Adani Enterprise today, and other stocks, of course, we have to see. One can understand the fall in Adani Group stocks, but ACC and Ambuja, I don't think that it warrants such a big fall in those two stocks. So there may be some kind of a support there also, Ambuja Cements and ACC. After all, they are all established business for a very, very long time. Usually, when a support is broken and market falls decisively, so that support becomes the resistance. And when a market decisively breaks on the higher side, and that resistance becomes the support for the next leg. So by that logic, 17,700 was supposed to be a big support, and once that level was broken yesterday, market went for free fall of another 150 to 200 points, and now markets have broken decisively 17,700, and now that 17,700 is likely to be the resistance for this series. Of course, there's only one day today only. So 17,500 to 17,700 seems to be the range for today's expiry. I'm talking about a close to close basis, but intraday it can breach either of these levels. On a closing basis, Nifty is likely to close somewhere between 17,500 and 17,700. So yesterday, interestingly, 17,600 straddle was trading around 100 rupees. So that indicates why 17,600, and because since the market has fallen so much, there is a possibility of a slight recovery. So that's why instead of taking 17,550, I'm taking 17,600 straddle, slightly in the money straddle. So let us see what happens. But today, there is no way Nifty will be closing above 17,900. So therefore, the February, the third straight month, we are closing in negative. But the first 2 months was a normal correction, but the third month is, because of Adani stocks. So we do not know where the Adani is going to stabilize. And as of yesterday, Adani Group has lost 70%. And many stocks like Adani Total Gas, they are like 75, 78%. Even the Hindenburg report suggested that it is overvalued by 85%. So that means at least after falling 85%, things should stabilize. So one can say Adani Group stocks are somewhere near the low, but it doesn't mean that one can buy the stocks now. They are likely to fall another 15 to 20% from here, so that 85% target may be achieved. But again, we do not know whether the Hindenburg research is accurate. Okay, because companies give values, market gives valuation. So it is a market that has to give the valuation, not the Hindenburg. But I'm assuming Hindenburg valuation is the worst possible valuation, and by that standard, Adani Group stocks can fall another 10 to 20%. So keep watching the Adani stocks for the overall market sentiment to turn around or continue to fall. Until then, markets are going to be volatile. So hope you enjoyed listening to this audio. Thank you for listening.